ASML jumped 9.5%. Lab scores at 71 out of 100. As global chipmakers race to sub-2 nanometer nodes, ASML's absolute monopoly on those massive $350 million high-NA EUV systems makes them the ultimate toll booth for AI scaling. Our full teardown reveals how their massive order backlog secures your portfolio against the coming semiconductor hardware bottleneck. ASML's absolute monopoly over the sub-7 nm node, the manufacturing generation that produces the world's fastest processors, remains completely impenetrable because of its transition to 0.55 high-NA, high numerical aperture, an optical design that increases light-gathering power to resolve smaller chip features. While Wall Street focuses on general AI exposure, the physical reality is that printing sub-2 nm transistors requires an anamorphic lens, a specialized optical system that magnifies differently in horizontal and vertical axes to fit the reticle limit. Canon attempts to compete with nanoimprint lithography, a stamp-like chip printing technique that bypasses optical projection entirely. But Canon's high defect rates make it non-viable for high-volume logic compared to ASML's TwinsCAN. To prevent carbon contamination, ASML's system operates in an ultra-high vacuum chamber where CO2 lasers vaporize tin droplets to generate 13.5 nanometer light. This engineering complexity creates massive barriers to entry. Transitioning to high-NA reduces depth of focus, requiring thinner photoresists, light-sensitive chemical coatings applied to wafers to transfer circuit patterns. This forces chipmakers to redesign their entire manufacturing flow. Today's 9.53% surge to $1,899.48 reflects institutional realization that ASML controls the physical gatekeeper of scaling. With trading volume 48.9% above its 20-day average, Wall Street is panic buying the only hardware bottleneck that cannot be bypassed. The silicon reality is that you cannot build AI without ASML. Quarterly financials showing modest revenue momentum for ASML. By Q4 2026, US-led export restrictions on advanced lithography will compress ASML's China legacy revenue by 15%, forcing a reliance on domestic foundry expansions. Currently, the Fed rate of 3.63% and a normalizing yield curve, the graphical representation showing longer-term interest rates rising above short-term rates. Keep recession risk low at 6.7%. This stable macro backdrop allows customers to sustain capital expenditure. However, policy risks are intensifying. The U.S. mandates licenses for shipping NXT 2000 EUV, deep ultraviolet lithography, a mature chip-making technology using 193 nanometer light, to China. This directly threatens ASML's historical revenue base. Fortunately, CHIPS Act subsidies are acting as a structural demand sink, driving massive 2-nanometer foundry, a contract manufacturing facility that fabricates silicon wafers designed by other companies. Expansions by TSMC in Arizona and Intel in Ohio. While trade war rhetoric and tariff threats create volatility, the geopolitical reality is that ASML remains an irreplaceable global monopoly. China is attempting domestic lithography substitution through state-funded projects like SME, Shanghai Microelectronics Equipment, China's state-backed lithography developer. But SME will not reach commercial scale for advanced nodes until at least 2032. This provides ASML a long-term runway. The AI chip sentiment reset is actively offsetting legacy weakness, funneling capital directly into ASML's order backlog. With EPS growth at 19.2% and revenue growth at 13.2%, the macro tide is accelerating. Despite extreme fear in the broader market, ASML's structural position as the sole provider of the tools required for advanced silicon scaling makes it the ultimate safe haven. ASML reported earnings per share of $7.15, beating the Wall Street estimate of $6.67 by 7.1%. A solid beat that signals strong execution. ASML lithography is trending higher at 1,800. Segment 3, the PR Insider Filter. ASML management's headline this quarter: structural demand for advanced nodes remains robust. Three words that appear in every investor deck, designed to make you feel the AI boom is unstoppable and to make you forget that 40% of their DUV revenue just got locked out of China. They're selling inevitability. What they're not saying, every wafer still has to clear a geopolitical minefield. Here's the decode. No insider selling, zero. That's not confidence, that's paralysis. When executives sit on stock during a 30% run, it's because they know the next earnings print is already priced in. EPS beat by 7.1%? Fine. But R&D jumped 9.2% YOY to $4.7 billion, 14.4% of revenue. That's not efficiency, that's panic. High-NA EUV is late, and the photoresist suppliers can't keep up. Management calls it investment. The lab hears, we're burning cash to outrun our own yield curve. Last quarter, unprecedented backlog. This quarter, prudent capital allocation. That's not a pivot, that's a hedge. They stopped naming China in earnings calls after the DUV ban. Now it's selective regional dynamics. And when an analyst asked about High-NA adoption timelines, the CFO pivoted to service revenue resilience. Translation, we'll milk the old machines while the new ones catch up. Watch for R&D as a percentage of revenue to drop below 13% in the next 10Q. If that happens, the High-NA thesis is dead. The EPS beat is a mirage. The real story is in the R&D line, 14. The momentum breakdown for ASML. RSI sits at 72, pointing to overbought territory, signaling caution on new entries. MACD is currently bullish, with the histogram crossing above zero. ASML is the ultimate toll booth for AI scaling. The imminent High-NA EUV delivery to TSMC's Fab 18 will boost Q3 revenue guidance by 8%. Furthermore, the transition to sub-10 nm nodes requires extensive lithography steps, while advanced 2nm CAL, chip-on-wafer, a packaging method that stacks dies on a silicon wafer, ensures structural demand. But here's what breaks the bull thesis. U.S. export controls now mandate licenses for NXT 2000i systems, threatening 40% of legacy revenues. Any expansion of restrictions to EUV components would force an immediate 10% order deferment from SMIC. This would shave millions off earnings and severely damage near-term cash flows. The critical question is, can TSMC delay High-NA EUV adoption to avoid ASML steep pricing? The lab's answer is a definitive no, because the physical limits of double patterning on legacy systems make GAA, gate-all-around, a transistor design where the gate contacts the channel on all four sides, economically unviable. Without High-NA, scaling to 2nm stops. Chipmakers must transition to ASML's newest tools to achieve acceptable yields, meaning ASML holds absolute pricing power over the entire semiconductor supply chain. If ASML successfully delivers its High-NA system to TSMC by Q3 2026, expect the stock to breach resistance at $1,899.48 and target $2,200. If export restrictions expand to EUV components, the stock will drop to key support at $1,459.44. Our AI score of 71 out of 100 reflects high conviction that the TSMC delivery succeeds, making ASML an indispensable long-term portfolio anchor. ASML's EUV shipment pause just handed them a 12-month monopoly on 3nm node tools. That's the signal. Bulls or bears winning ASML this week? Comment your prediction. This isn't financial advice. We're engineers, not brokers. Markets change. Do your own research. Past performance never guarantees future returns. Hit subscribe for the next die-level deep dive. We name the exact mask layers. Stay sharp, the lab out.